So very good morning to all of you, and today we have our web session on psychological challenges in trading performance. First of all, I'd like to thank all of you who have come today and are attending this webinar. All this really goes to show that on a Sunday, bright Sunday morning, on a Sunday which is during the winters, it's so pleasant Sunday mornings. You are here to listen to something, to know something more, to improve yourself a bit more. And that is something I really appreciate. My name is Mohak Pachisia. I'm a full-time trader. I'm a trading coach and psychologist. So my journey started about 9 years back in the stock market. From the very first year of my college till today, technical analysis has been the rooting point and the passion. I'm a chartered market technician, which is the most prestigious degree in technical analysis in USA, and I'm also a CFA, a chartered financial analyst. So doing these two courses have given me an exposure to a lot of market education, and what I have realized is that 80% of it was not so much valid to trading. What was more valid to trading? A lot of things I learned in technical analysis, a lot of things I learned by observation and understanding performance, and most importantly, understanding myself. Moreover, what has happened overall in the process is that I have gone to over 3 to 4 prop trading firms, and I've trained traders. 3 to 4 prop trading firms I've worked with, and have trained traders across the globe, online, offline, in cities like Mumbai, Bangalore, Surat, Delhi, and I've also given a lot of sessions to people in general through my course, which is technically sorted. This teaching has been going on for the last 3 years, to be precise, and the last 1.5 years I've started giving one-to-one consultations as a trading psychologist, because by far that is one of the, and we'll discover all that today, by far that is one of the most intriguing as well as the most important part and aspect of trading psychology. So once again, I welcome you all, and I've also been involved with teaching in in a course combined with National Stock Exchange and St. Xavier's College. I've been a guest lecturer there, and I'm currently working for myself and with a European firm called Unicara Capital, and that is what is the simple life which I'm doing right now. Is trading for myself. On weekends I teach, and Monday to Friday I trade. So that is what is going on. It's wonderful to have these interactions once in a while. Whenever I get the time, I try to arrange some free webinar. So apart from my course, a lot of new faces come to me, and we have a nice chat and nice interaction with each other. So ask, interact, have as many questions as you want to ask. There's a panel on your right hand side. You can ask as many questions as you want, and you can also raise your hands when I ask you to do so, so that I can resonate and ask you questions, right? And moreover, let's start now. And so our session today is about the psychological challenges in trading performance. So first of all, let's just define what do we mean by psychological challenges and what do we mean by trading performance. Let's start with trading and look at it as a more performance-based thing. You see, anything which has got to do with performance has a different aspect to it compared to most other things in life. From a very young age, we are conditioned to think in terms of education. Even I was studying and getting my market education or finance education for a long time, and I really found that there was something missing over there. Then I realized that my ongoing trading practice was the actual better and the more training oriented learning. So whenever we have something to do with education and the application of education, it is not performance in other aspects of life. But when it comes to trading, or when it comes to creative arts like music, or maybe it comes to sports, at that time it becomes a performance act. So in case of trading, which is a performance act, there are certain pointers which define why trading is a performance act, and on certain parallels it shares with other performance acts. You can compare it with any other performance act, any other parallel will be there. Number one, sustaining through a certain period of time. So when we are trading, there is controlled decision making. When there is controlled decision making, we are sustaining a certain mindset, a certain power and stamina to make those decisions over a period of time, right? We also depend a lot on our mental state. So in any performance act, a lot of dependence starts coming in, or at least there is a factor of dependence on your current mental state. Like if tomorrow Pankaj Udasan is going up there and singing a ghazal, obviously he's not going to call up his friend and chat with him in some other town for 15 minutes before going on the stage. He wants to be in the certain mental state. Or maybe when Usain Bolt is going for his sprint, he would want himself to be in the zone. Or even if, for that matter, a child who is a school student is giving an exam of a subject like mathematics, he would obviously want to be in a certain mental state before the exam. Similarly, on a day-to-day, trading is so day-to-day. It seems like it is like any other work, but it is a performance-oriented act where you are coming on a stage for a certain while and you're doing your act and you're going away. Now, you are the only audience there is, and you will be the only one who will applaud yourself or not. When we think in terms of trading to be a mental state where we are performing something, we change our alignment of thinking about trading from something which is more theoretical, more fixed, to something which is a little more flexible. In my journey with technical analysis and especially teaching people, a lot of people come to me and they say, sir, tell me which is your favorite indicator. Tell me which is something which will give me a formula which, like, if this goes above this I should buy, or this goes below this I should sell, or if this happens I should buy, if this happens I should sell. Is the stock price going because of this pattern or this candlestick and that? No. The mechanism of price movement is the rooting point of your decision making, firstly. And prices have curvatures. They don't have squares and boxes. They don't have linear relationship with technical parameters. When there is no linear relationship with technical parameters, you see, what I'm trying to come to here is the last point. When there is no linear relationship with technical parameters, what happens is the decision becomes very individual. A decision making becomes very individual. If you are understanding this, raise your hands, please. If you're resonating with me that there are no linear relationships, you can raise your hands. Right? We always go in a mindset to think that if I'm going to learn something, I'm going to apply the next day. At least realizing that the market is not ready to budge with that pattern in the next day. And maybe because you're looking for something so carefully, you find something which is slightly like that and you go and you burn your fingers and come back. There are no linear relationship with technical tools in the market. There is always a non-linear relationship. In this non-linear relationship, we have to make certain financial decisions, and because those financial decisions can never be the same for two people at the exact point of time or exact outlook, with an exact outlook, there will always be the element of individuality related to trading. Even if you are getting, say for example, a lot of people think it is wise to take advice or listen to somebody's, have some calls from a broker or something like that, or multiple brokers. I mean, with due respects to everyone, it is ultimately about the act and execution, which will be very individual, right? So when that thing will be very individual, you need to lay out certain things for yourself, and there is automatically the element of evaluating yourself. Now, before looking at it as a performance act, there is a tendency to measure things. Given a professional racer, like an athlete, a professional athlete who is running a 100 meters race, his parameter of judging his performance, evaluating his performance, will be completely different compared to someone who is racing for a school tournament. We need to understand that where our starting point is. If we understand the starting point, we come to a position where we are able to gather our real evaluation from our perceived evaluation. We'll come to all those things more fast over time. But there are a lot of things which cause barriers from these things to happen clearly. The things that cause barriers for performance act to happen clearly, to be able to make individual decisions and sustain the mental state of controlled decision making, to depend on a certain environment, to cut off the dependence from a certain environment, or to be indifferent to a certain environment and certain mental state and still do it, because certain times will be stressful, certain times will have exterior. You cannot control the fact that your most horrendous relative will call you while you're trading, right? But you can control certain things and develop an understanding, because all these are triggering certain things. Even the fact that you're evaluating yourself at the end of the day makes you feel like you're standing somewhere on a relative basis. Why? Because most of us understand that as we grow up, most of the happiness is relative happiness. It is not inner happiness. So, addressing the emotions which come about and which hinder our path to the performance act are the very dominant emotions in trading. So there is anxiety which crops up. There are a lot of regrets. There is guilt. There is also boredom, frustration, sense of being lost, and exuberance, and a need for safety. How many of you agree that these dominant emotions come in different permutation and combination and different timings to you? You can raise your hands. How many of you agree that these emotions revisit you in different timings and different clusters, right? So these emotions revisiting you, and the problem is that we are so repressed socially that we are not allowed, or we are not appreciated when we express our emotions, right? So there may be a lot of regret and resentment, or there may be a lot of frustration. You do not want to go back home and tell this to your wife that I'm frustrated, or you don't want to go and be quiet or be a little reclusive and ponder upon certain things before you get back to yourself, right? Go ahead, ask any question. When I just pause, I will answer your question. Don't worry, just ask any question if you feel like. At the same time, there is exuberance. Exuberance is the opposite of regret, frustration, hesitation. Exuberance is a state of mind where there is actually no perception of risk. You just go all in like that, and in the process you might do something right, you might do something wrong. Whatever it is, it will be very heavily coming to you, because even if you are right, you would want to do it again. Even the state of exuberance or a state of relative happiness caused by a lot of profits or a streak of profits is something which we cannot subconsciously be in alignment with. Any emotion is basically a disturbance to our mental state. Agree or disagree? Raise your hand if you agree. Any emotion is basically a disturbance to your mental state. Even the fact that if a stock, if you bought and it's going up, and you just start feeling good about it, the moment it corrects, you start feeling completely 360-degree opposite. So it is basically not the market which causes the stress, or not that one trade which can take away all the energy from you for a day's work. It is your association, your emotional associations in the market that make it so. Right? And now coming to all these emotions, so a lot of you agree. So that's a good thing. You know, everyone is resonating. These are very common things. They are very common things, but we tend to ignore, to objectify and line them up. We tend to ignore all that. First of all, there is anxiety. A lot of places that anxiety is a starting point. Some cases it's the middle point. Some cases is the last point. You know, and anxiety is also related to how your physiological buildup is, how your psychological buildup is. So there used to be a friend, uh, not such a close friend, but probably he used to be an excellent student, and he always had a sense of competition in his mind. An excellent student, a huge sense of competition. And again, with due respect, those emotions did not come in hand while he was trading. While he was trading, what happened was that all the anxiety of missing out on something, not being able to do it perfectly, someone else getting to do it better, doing it better than himself, caused illogical, unnecessary anxiety. In today's world, if we don't get something done from a very young age, we are burdened with a lot of anxiety. I met a cousin of mine a few days back and asked him, why do you have this constipated expression on your face? What's wrong with you? I mean, he said, I'm not done well in this test. And, you know, again, with due respects, but the point is that test was not the end of his life. He was an excellent student, is an excellent student, and he could have fared well in the next test. Instead of being forward-looking, we are taught to look backward. Because from a very young age, our parents, teachers, principals, uh, every figure we meet in our life makes us think, what have you done? An individual buildup of anxiety comes from a very young age, and as individual buildup of anxiety comes from trading, because we associate money with success and achievement, right? I have a question from someone. Amit ji asks, before trading, I am not confident. It may fully technical call may be sure that will happen. Okay, maybe he is very sure of a high probability technical strategy. It can happen to a great extent. So it's like 100%. There's never 100% in markets, but there can be a 90% chance of making money in terms of subjective probability. But due to the fact that he's afraid, he stops the trade, and after 2 hours he sees that what he thought was actually being executed. Okay, so basically the problem with Amiji is that he says that before he takes the trade, he is very sure of a high probability trade to be a wonderful trade. In most of the cases, he is stopping out from the trade too fast, and the trade is again going in his favor after he's out of the trade. Okay, so great. I think by the end of the webinar, a lot of things will be covered to address you the answer to this question. However, I will also take it up again, you know, so when I take up more questions, keep flowing in questions and I'll keep answering them, so no problem. We'll come to what you are saying. Secondly, regret. Now, regret and resentment are again the most complex. Regret is the most complex emotions of all in trading and in life. I mean, it is like crying over spilt milk. So when you are crying over spilt milk, it is actually not something which is materially helping you. Also, we must understand that regret is something which is built into our system, built into a system by the very faculty of creation to make us understand what to do better, to make us understand what to do better. Now, what we understand out of regret, apart from it being a confusing emotion, that it is helpful emotion. Instead of putting regret as it is, taking it as it is, you must start taking it in a manner where you learn from your experiences in your past, but you don't get attached to your experiences in your past. You don't, you learn from yourself and you blame yourself also, but you don't hate yourself for making mistakes. There can be also a relation of guilt with a lot of intellectual stimulation which you have. If you have a lot of intellectual stimulation that I can do this, I could have done this was easy to me, the higher the regret will be. Because you will regret more. Suppose you're going to a friend's wedding and you're going to the airport and you get late because of the traffic. If you're 1 hour late, if you're 1 hour late to the airport, you will not regret so much. But if you're 5 minutes late to the airport, you will regret a lot. So our psychology works this way, that when a trade is very close to our understanding, we regret it more. Least realizing that there are so many stock which give so many opportunities and so many other instruments which get so many opportunities. And instead of that, focusing on the things that we have missed out, as long as it was in our intellectual array. Are you resonating with what I'm saying? Raise your hands if you're resonating. As long as it was in your intellectual field of work, or in the range of your intellectual thinking, and you missed something, you regret it more. Least realizing that there were so many other things you couldn't have humanly, possibly, even capital-wise, taken so many trades. Boredom is another problem because we address boredom with laziness, and when there's nothing happening, to make something happen, we need this to seek some sense of action. Frustration, a sense of being lost, put together, come after we don't perceive losses very carefully and very properly. Not very carefully, but in terms of not very in a grid perspective, where we can learn and get inspired from our losses rather than get into a state where we are being frustrated by our losses. Also, exuberance is the wrong use of your profit streak. A profit streak causes happiness, causes exuberance, causes you become overly happy. And that is the wrong use of those profits. The worst use of those profits, because the very faculty of making profit goes away. And the last is need for safety, which I feel Ashokji's question is answered here. That the need for safety makes him, Ashokji's question was, I'll repeat for everyone. His question is that he sees a very high probability technical setup coming out, but he does not take his steps ahead to execute it properly. He even enters the trade, but he gets off on some small correction, or probably he gets off after some small profit, but the major part of the move which he actually perceived is not coming out. So there is a huge lack of objectivity, and mostly that lack of objectivity is coming because of the sheer need for safety. because he needs the safety so much, he is focusing on getting a high probability trade setup. It is a good thing that his need for safety is getting him close to a high probability trade setup. How many of you have felt like this? That it is actually your need for safety and your need to keep down the risk, which is putting your mind to the most high probability and low risk trade setups, right? Now, for some people, it does not happen with perfection to get good risk reward. For that, you need to actually learn things and have the knowledge and uh, wisdom of acting with the price mechanism. However, those who are successfully being able to find out low risks and high rewards trade setups, the key driver to them finding out a low risk and high reward trade setup is their need for safety. But what happens next is that you are not being able to be objective when the money is in the line. And if you're not being able to be objective, your entire hard work to find out and analyze and bring out the trade in front of your eyes was completely going waste. We'll see how we address this, but this is mostly the need for your safety that it is happening, right? You can ask more questions, no problem, right? The two things which majorly happen because of the emotional triggers. You accept it or not, you like it or not. The highest level of and the strongest emotions in life are not because of any trauma, any romantic trauma, anything else which is melodramatic in your life, anything which has got to do with career or passion, anything which has got to do with certain art form or certain reading or certain interest, as much as the emotions that are attached to money. For that emotion of money, which is a common parallel in everybody's life, trader or no trader. So while we are trading, we are not taking money very objectively, and that is why these emotions are causing certain triggers, and these triggers cause you to behave in broadly two particular ways. Right? The first is to go too fast. What happens after two good trades? How many of you increase your trade size and quantity after two good trades? Please raise your hand. After two good trades, you increase your trade size. How many increase their trade size after one good trade? Actually, more hands are coming up with one good trade. So, how many of you are actually not getting very good trades right now? Okay, it's okay. So the point is that once one person gets a set of good trades, a cluster of profits, a streak of profits, whatever you may call it, what generally happens is that the person tends to feel and act like as if he is a financial genius, as if he's a market wizard, and become overly impulsive and get affected by the chance of taking a risk and finding an opportunity, going too fast, wanting too much too soon. I know that in the markets there is nothing like too much or too less. Sometimes effortlessly you can make a lot of money, and sometimes putting a lot of efforts you can actually lose money. What I'm trying to say is that after a certain degree of effortlessly making money, a lot of people are not being able to subconsciously digest that money. And the reason why that is happening is because you're not associating money with objectivity. You're associating money with your stature in life, your survival potency, and not as a result of your trading performance. Once you do that, your ego comes in. Today we are discussing psychology. We are not even touching upon ego. There are certain deeper layers of psychological protection which go beyond psychology. But somewhere or the other, your ego is coming to the picture and telling you that, okay, I have got this, I can get this done. If I have made money 2 days back, it should not be difficult for me to make money of the markets every single day, every single trade. And that is how one tends to become a more of an impulsive trader. Also, this is the profit case. There's a case where there's a desperation. Okay, there's a desperation. That desperation comes mostly when person does not take his losses in a very clear manner. The perspective towards losses is skewed to only let the losses be like something which is attacking you and something which is taking something away from you. And in order to get that back too fast, one tends to take impulsive trades, very small time frame trades, and expecting a lot out of them also at the same time. How many of you have seen yourself going too fast and pacing very high in certain market environment? Please raise your hands if you've seen yourself do this. A little bit of profit should not make you impulsive and too fast, and a little bit of loss should not make you want to get back what you lost very fast also. There needs to be a certain balance which will only come when you ignore these things and you stop. Don't ignore what I'm saying in the presentation, but when you ignore your need to go fast and associate your emotions about money on some other lines, we'll come to those solutions. The second point is to go too slow. Now, most people find a lot of hesitation to take a risk, to take a trade, or slow may mean also to hold on to a trade very long, not acting fast when it is needed. But mostly when I'm talking about going too slow, it has got to do with a lot of feeling of hesitation. The need for safety, the need to lose less and make more, just because sometimes market opportunities exist where you lose less and make more in terms of 1:50 risk to reward, does not mean that every day you will get 1:50 risk to reward. Just because you get trades and the opportunities in the market where the risk to rewards are more than 1:5 does not mean you will get those kind of trades every day. Therefore, when your need for safety kicks in, you tend to look for taking those trades which could possibly yield that kind of return. And most of you feel hesitant when you're going too slow. Most of you feel hesitant to take a risk when the trend actually is presenting itself. How many of you participate in the trend without thinking that this will turn around or how bad it can be if it is a false signal? Or how many of you rather find that you are becoming, not the impulsive, but in your need to cut down the impulse, you're actually not taking a good trade? You can raise your hands. So quite a few of you. Now, hesitation also happens when you wait for the trade to start moving. So I will give you a small example. Uh, Now, one of my students recently, since we had discussed certain things and we had figured out that there could be a possibility with our concepts only, nothing too special, only what we do in the course and mixing them. And this person is an old student, so he had messaged me one of the Fridays, sir, this, and this is I think last to last Friday about stock Ambuja Cement. It was on my radar as well. Uh, I'm not cutting out on, I mean, I'm cutting out all the analysis and just coming to the conclusive point was that the stop loss was somewhere around these levels or these levels. Yeah. And the stop loss was around these levels actually. And the trade was a short trade over here. Okay. So he said that he was short over here. But he has not taken the quantity he should be taking. Like everything was fine with the trade. If the person was short over here, he did not take those quantities which he should be taking in the short position. I asked him why. He said that I'm generally trading two lots. I traded one lot on this. So on a very good trade setup, where the trade output was also ended up being very good, he could only capitalize on half of his profits, potential profits, simply because he was hesitant at that time. He was hesitant at the time. And the second lot which he shorted was at a much lower level, which actually raised his average cost of shorting to around these levels, which means a little more waiting after the retracements to actually bring out the true potential of the trade. What I'm trying to tell you, a lot of people get hesitant so much that they actually enter the trade, but it is too late according to a good risk reward. And then after that, it takes only one bad trade. Because your entry is at the wrong position, it takes one bad trade to, blow up some major part of your money. A lot of people will wait, the breakouts happen, the trends emerge, the correct candlesticks happen, the weekly closes are amazing, the certain volume parameters come up, even wave structures are amazing. All of them they wait for. And once the price has hit the 52-week high and then 3 days later they go and enter the stock. Yes or no? Isn't that hesitation? So even hesitation, one of the key drivers of a psychological hindrance in trading, should be never present. Both these extremes are not good. And I read these beautiful lines somewhere that all virtues lie between two extreme vices in any case. Someone has just messaged a question. So if you want to explain that question, you just written everything is finished, something like that. Okay, yeah. So Ashokji says that a lot of people enter, or he's seen himself enter when the major parts of the move have already been missed, just because uh, there's been some hesitation, and then you have entered the move because you have thought that when I enter this move, I will actually play out what I had thought about. I don't want to miss out on something I had creatively analyzed. So the fear of missing out. So all the way from hesitation, you again go to impulsiveness because of the build-up. Anyway, don't associate, cut off the association of your price movement or what you thought with the markets. Only associate with what you did or you're doing. Mostly what you're doing, right? psychological and cognitive aspects that crossroad each other. Now, a lot of people ask or are driven by how many of you have had one good trade in life, at least, or one or couple of good trades in life where you have taken a trade um, very consciously about the risk part, how far the stop loss of the trade is, how far the target is, or not even the target, at least the stop loss, at least sizing your risk down and focused on taking a trade very consciously and sitting through the trade and following a trend. How many of you have taken at least one or two trades like that in life? We have done things on time, got in on time, got out also in decent profits, right? So a lot of you have not actually got such trades. I'm surprised. So the point what I'm trying to tell you over here is that I'm actually, with due respect, it's not a surprise. It takes time to understand how to take consistent, nice trades. Uh, it is okay. It is okay if you haven't got any good trades as yet. The way to get it would always be through your set of analysis. The reason I don't actually even give out calls to people is because the times when I have given out calls as a service literally, I have had clients, I have seen the clients have made money if they executed my calls correctly. I would make them execute it correctly to some extent. And over a period of time, when I would go back to them and ask them how they are doing, I would get my fees, I would get my money, and I would ask them how are they doing. And they would say it is all flat. I would ask how? I said, see, I made money through your calls and the M2M which I have now. Say for example, those days you had the lot sizes were smaller. So suppose it is like anywhere between 80,000 to 2 lakhs, anywhere. I did this for such a long time and, about a month gave me 80,000 or 2 months gave me 2 to 3 lakhs. I've done well with your calls, but the problem is I am holding on to this stock, to that stock, and now my margin is blocked because I'm just holding on to those trades, or I made some other mistake, some impulsive trades on some day, some result was, or something like that. I lost the money. I at that time realized that all the calls which I had given that person or those kind of clients, they were genuinely nice people. It's just that they wanted to play out their own freedom in their trading. Somehow they wanted to play out their own conviction, and whatever money I made them was like a safety net for them to repeat the stupidity again and again. Those are the days when I actually stopped all that very consciously. I actually said no to a lot of people coming to me and still don't entertain it. And I started teaching from them. That time I realized that, if I'm giving something more permanent to people, they can make fish curry every day. Instead of me making fish and serving to you one day, teach you how to make fish curry. So what happens is, when you have a cognitive pathway in your mentality, what do I mean by cognitive? Cognitive means anything which is logical, scientific, right? So when things are logical, when things are scientific, they are building up a certain clarity in your mind. Also, they are building up a certain level of conviction which you can define even in your stressful moments. Even in your stressful moments you can define. So I'll give an example. Suppose there is a mother who is getting very concerned about her child coming from school. Maybe there's something at school and the child has got late. He doesn't have a cell phone at the time he's in school. And then suddenly she realizes, oh, he's late because there was some extra sport activity which went up to 1 hour extra. So under the stress, somewhere or the other she could define what could be the reason for this to happen. When you can define what this could be the reason for this to happen, you develop clarity and you develop fearlessness. How many of you have actually even used one technical aspect and felt that fearlessness and that definition? Raise your hands, please. Until and unless you build those cognitive pathways where you can well define a trade, it will be very difficult for you to build that fearlessness, because that plays a major role. Otherwise, the only aspect you will have in acting is the emotion. So let me give you a common example. Let me take a very simple example, and I will tell you how this is happening in different shapes and sizes. Let's say, for example, let's take Nifty. Now, one of the simpler, not getting too into the reasons, not getting into the reasons. If I tell you the reasons, obviously it will be very, very effective, but it will take a lot of time. Let me just tell you a simple candlestick, not explaining the anatomy of it, but I'll just tell you a simple candlestick and show you how the placement does not produce the same result, but it produces similar results. Okay. So I would like to call this the hammer pattern. The hammer pattern is a candlestick pattern which we are seeing over here. Okay. A hammer pattern is a candlestick pattern. I'm going to just tell you one aspect of it. One aspect, that when the hammer is being formed, the prices are rejecting the lower levels. Those who don't know the anatomy of a candlestick can go and check out the same YouTube video channel of mine. There you will see a simple candlestick video. Okay, that was a free webinar on candlesticks. So these levels are being rejected by the market. Understood? These levels are being rejected by the market because the price is going down, touching like it is putting the feet inside the water and then pulling back up. These levels are being rejected. Understood? Raise your hands if you understood. Okay, great. So these levels are being rejected by the market. I would like to believe that when the price comes in this zone, I must see what is happening. Now obviously there's another level of analysis here, but let me just tell you, in this zone there is a potential support. Okay. Now the other level of analysis will happen in a smaller time frame, but we'll do that later. Idea is that there is a sense that this area could be a support zone. Thus just this area. Okay. Now the market comes here the next time, and the prices have taken support in this area. Now this zone was completely valid to take a long position if the prices come and do certain things. Now here there were different patterns, here there were different patterns. So we are not going into that depth, but I will show you the similar things happening even later. Even later, when the prices move in a certain manner, they show certain aspects. And I'm going to take an example from just the last week. I think this Monday I traded it. Now over here there is a lower wick. Now this is also something like a hammer, and the next day I bought Apollo tires for intraday. This was this Monday. I had bought it intraday. So in this hammer zone I saw a certain pattern which made me go long, and I exited it also in that day. So this is such a small time frame, the trading a pullback. Whereas Nifty, that case was such a bigger time frame. And there are a whole host of examples like that. If I go to the past, the whole host of examples. You must go through the candlestick video and you will find out a whole host of examples. That whenever the price comes into this zone where there's a hammer, there's a potential of the price to take support. Now depending on what the price does when it comes here, we take a trade accordingly. Okay. Same goes for places like these. When the price comes in this zone, when the price comes in this zone, You see, the first time it's taking a very good potential support over here, right? So when you have made certain logical, now when I come, if I come in, the first time I started teaching, we had a webinar, we had a seminar in Calcutta, where I stay, and a lot of very good traders were there, a lot of even people, analysts were there, and it was a free seminar to introduce my course to everyone. I was introducing and talking about technical analysis. When I spoke about something as simple as this, I don't remember exactly what it was. Most of the people, and one person was so honest to say this, that I have not been trained or taught or not even thought of thinking in logical ways about price. If you want to think in logical ways about price, it is few steps ahead, few knowledge is just there. You can actually get yourself trained or whatever. You can read more, you can get yourself, you can come do courses with people like me, but there needs to be a logical pathway to be able to get over the fear and have a logical input and output. Amitji asks, sir, do you have technical analysis video on YouTube so we can learn technical from that? And if yes, you can. So, Amitji, I have a video. I have many videos on my YouTube channel. Talks about trading broadly, technical approaches, even candlesticks, even volumes, open interest. A lot of interesting videos and very useful videos. All of them have been made with a lot of input to be able to give you something with meat. Also, just like this webinar, I have a course which goes on Saturday and Sunday. It is a 20-session course where I teach technical trading, technical psychology, technical trading, trade management, and trading psychology. Right? So it is very important to have those pathways where you have a logical setting in your mind. If you have a logical setting in your mind, then you don't trade the method. You don't trade the method. The method will trade you. The biggest antidote to actually most of your trading problems is not to focus on what you're feeling bad about, not to focus on what you're feeling good about, but what the market is doing and what you feel from a logical point of view about the market, right? Ashokji says the most powerful moving average, which are the ones which we good for result? Ashokji, this question is not in coherence with what we are doing right now, number one. Number two, moving averages again don't give any results. Prices move and moving averages are lagging indicators. They don't lead. What is moving average? Scientifically, just mathematically, moving average is the moving average of price movement. As the trades go ahead, suppose a 5-day moving average, the future moving average will go down and the previous one will come. The previous will go down and if new one will come, right? So moving average is always lagging. The price will move first, the moving average will move later. Moving average has no bearing, and in such a small time frame as intraday, it will give you only mostly illusions that you will think, okay, that you're being able to make some connections, but you cannot count on your fingers that out of 10 times, 9 times you're making very strong connections. Moving averages have a way of dealing with them very creatively, and that requires a very step-by-step learning. It is not possible for me to say it in one word. In fact, sometimes I take half a class only on moving average. So it's like 1.5 hours they just teach moving average. But we do it very creatively. We don't do it in a manner where we have so such linear relationships. कि इसके ऊपर जाएगा, then you go and buy. इसके नीचे जाएगा, you go and sell. There are never any linear relationships. So market will move in their curvatures. So the way you use moving averages can be for 3 things. It can be for trend following, it can be for volatility, it can be for a lot of other things. So we need to align things properly. And moving average is a tool. It is not a trading system. When I say a method, when I say a trading system or a method, okay, I mean not to use one tool. If you use one tool, it is not technical analysis. Getting the point? Because technical analysis is a set of probabilities and technical trading is to get a confluence with multiple tools. If I use Elliott wave theory, I don't go out and tell people in the world that I'm the best at Elliott wave theory, I'm an expert in it, and this is something wow. I mean, this would be the worst thing I can do to training. Of course, it is the best, one of the most deepest thing I've heard, I've learned and I've known about and I've analyzed, most deepest thing. But I use it in confluence with candlesticks, with other indicators. So all these flashy things, see, the entire financial industry will gain from you by giving you those really colorful looking apps so you can trade from your mobile. And a lot of other industries will also gain from you if they make you believe that only one thing is the ultimate for technical analysis. You do Elliott and everything is there. You do Gann and everything is there. No, it is not so. Or you do candlesticks and everything is there. Everything has its pros and cons. I've learned candlesticks from Steve Nissen. Steve Nissen is the major person who got candlesticks from Japan to USA. And I still say that candlesticks are a tool. You cannot use them in isolation. You can't use moving averages in isolation. Getting the point? Never use anything in isolation. Build pathways to find confluence. Right? Build pathways to make confluence among multiple indicators. Absolutely. And I will not answer too many off-topic questions for now. Right? Since this was about cognition and cognitive aspects, we'll not go too deep into the off-topic questions. You can ask me later, ask me personally later. Right? Second, the only talent in trading is the trade without fear. And the best traders actually trade on underlying probabilistic output with an unflinching confidence. You getting the point? This is what I mean to say. When I mean cognition, I do not mean to go into a lot of indicators, a lot of topics which are related to analysis. But to put you analysis broadly, that the fact is that if there is one technical tool, if there is two technical tools, third one, fourth one, fifth one, sixth one, seventh one, and you make one, this works and says a buy, this is a buy, according to this is a buy, this is a sell, this is still a sell, this is a buy, this is a buy, and you mix it up and you use your instinct and decision making. And you say, okay, fine, this would be the right entry, this would be the right stop loss, and this would be the right target. First, you make it a set of technical indicators coming together, not one thing. Most people forget about it, including even time frames. Next, you realize that it is never about a single trade. The only way to trade without fear is to realize that it is not about a single trade. It is about having a confidence on every trade equally while you are executing it and letting go of which one is going to work out and which one is not going to work out. For that, you understand that it is not about being profitable on one trade, but being profitable on a series of trades, which is important. Agree or disagree? Right? So a lot of you are actually working from that perspective, which is extremely nice. That profiting from one trade will not make much difference. Profiting from a series of trades will make you a consistent trader. Now, if you are making, 40-50,000 rupees on every trade, and you're losing 1 lakh rupees in every trade, you're not consistent. So giving yourself a pat on the back for one single trade is also wrong sometimes. Appreciate yourself for everything that you do, analyze what works out for you, but don't do it to the level that you lose the faculty to do it with the stability next time, right? So the cognition The cognitive pathway should be very clear. What is my method? What is the output and the purpose of my method? We do a lot of things for purpose these days, we do a lot of things for pleasure these days and not for purpose. We need to focus on the purpose, not the pleasure. If you're trading for addiction or for the thrill of seeing your money go down and come up and come down and go up, you're making completely garbage associations. That should not be the purpose. So lay down well your methods and purposes, right? A problem with the behavioral spiral a lot of people face. My job right now is to actually make you aware of these things, because maybe a lot of you have not thought of this in these terms. This is a behavioral spiral. I'm sure a lot of you have done some kind of have some kind of technical background, some market education also, some self-trained and self-taught, very nice, and are able to do a lot of things right. But the reason why we are here is to solve this issue. The issue is this spiral, a recurring spiral which makes you move around in circles. And when you are inside circles, you're not being able to break out into a form where you can stably and with stability and consistency make a lot of money. First of all, this losing trading behavior pattern repeats itself. Any pattern repeats itself. Any human behavioral pattern repeats itself. It does not change until there are changes happening in different levels. The first change, for those who have no idea of price movement, must understand that price mechanism is very profitable. Technical analysis has a predictable value, and if you think you are acting on hunch, maybe 20% of it will work, 30% of it will work, but a lot of it will not be well defined for you. There is no harm in having a mixture of a sense of the market and price movement with technical analysis. I completely accept and I do it, that there is a sense of the market along with technical analysis, which also works for me. And one develops those sense with time and experience and the right associations. Okay. And repeat those patterns rather than repeating the losing behavior patterns. So to break off from this pattern, you need changes in few dimensions. One of the dimensions is that you go out there and you learn the right things, or get to do the right things. Okay, give yourself time to associate with the market in a way where there is, someone called me a few months back, saw my YouTube video and just called me. He said that one of his seniors, she was a senior. So one of our seniors said that if we kind of keep doing it, we get used to it and we gather experience and we grow and make money. I said, yes, you do it. But the point is, the reason she called me was because it was not happening for her the right way. I said, if you build the wrong association with the market, no matter how long you do it, you'll only repeat the negative habits. Right? So the first level is to understand price mechanism and have a cognitive pathway to be able to define why you're doing what you're doing. Second level is on an emotional and psychological level, heal yourself in terms of thinking the right way, repeatedly disciplining yourself, in certain ways restricting yourself, in certain ways freeing yourself, but coming out only when you are going to act in a certain way. Those changes are a little deeper changes, and then the psychological can lead on to a lot of spiritual change also. So those are deeper levels of changes, but at different dimensions you need to recognize why your pattern is recurring and what are the triggers and how you can nullify the energy of those triggers. It's as simple as that. Second, certain states of mind will be triggered by P&L ups and downs. So the entire spiral, okay, the spiral going on, we'll define the spiral in the next slide. The spiral is going on, and the profit and loss statement, in fact the M2M rather, is actually defining your entire mental state, because along with the M2M you are moving your self-worth, your self-evaluation and your self-image up and down. Some way or the other, that is a huge problem to trade objectively. You can't make a living with that. You can't make it a living with that kind of attitude. Third, a self-focused attention. When everything is only about your M2M and your performance and how well you could have done or you should do next time, when everything is about that, what happens more often than not? What happens more often than not is that your attention is not on the market and what the market may do. You may have a bad day in the first half of the day and you have not lost so much money that you have to crib over it, but you choose to crib over it. And the best trade of the day is happening in the last 1 hour. And you miss all of it. Maybe it follows through the next 2-3 days also. You miss all of it. So when your attention is so self-focused and not market-focused, you are literally self-sabotaging yourself. A lot of this happens with people. And when they start making the change, the focus slowly starts shifting. I have seen this happen, and I have gone through stages in my journey of learning which have taught me and created the depth of what I'm saying right now. So I would actually start becoming self-focused and not market-focused. And I've seen this happen with a lot of people I've trained personally or done one-on-one as a psychologist also. It's something which creates a very important change. So take this point, apply it to yourself. The self-focus, okay, the self-focus will give you a lot of losing days. And when this focus becomes on the market, even half the losing day will come out back in profits. Or I'm not trying to girdle inside one day or a couple of trades, but over a series of trades, every time the market focus will take you back to the right parts of the trades which are there in your system and your method. Every time, at least those trades will be taken. And over time, even the impulsive and the wrong trades which are taken and cause the unnecessary losses, some of the losses are natural, but some are unnecessary. Those will be taken away from you over time. So from maybe making consistently minus 1 lakh a month, you will start, I mean to say, a series of trades over a month, you will start making it into a little more neutral before you actually get into the positive. So you need to counter this spiral, you need to create some other spiral. So instead of self-focus, give your focus to the market, and that will also increase your patience. Next is force. In today's world, we don't even meditate for peace. We meditate for results. We meditate for results. Agree or disagree? In today's world, we don't meditate for peace. We meditate for output. We do everything for output. We are taught to do everything for output. Results will show. Your mark sheets will show, your interviews and your resume will show, everything will show something, everything will be output oriented if it has to be significant. We are so hardwired to be output oriented in order to try and be significant that we start from the finishing line. We want to start from the finishing line, and the markets are the worst place to do that. Simply because things are not in your control. If I have to give an exam tomorrow at 9 a.m., I can work very hard for it from now. I could have worked hard for it for the last 2 weeks, or I can start studying tonight after I'm done with my enjoyment. But that is in my control. When it comes to the market will move when it will move. I will enter or exit when it will happen. I would be there before a very major and strong move. Depends on my timing also. I don't have to run and jump the gun with the market every time. And all these things which lead me to doing it the right way are actually more input oriented, not output oriented. Agree or disagree? when you are input oriented and you're market focused, you're not self focused, you're actually playing out your method right. It is simple, it is not difficult. It's simple to understand, right? And the force, why I'm saying, even we meditate for a purpose these days, not for peace. Not for, we want a goal orientation all the time. You can be goal oriented, you can be output oriented as an individual. It is good. It works. Maybe it works in some other job you are in, some other career you are in, and you have made a very respectful level of increment and improvement in the profession over time. Incremental growth has been there, and it worked for you all your life. And you want to replicate everything that has worked for you all your life into your trading. And that is where you need to stop and say, I will be input oriented. Because being output oriented, like I've been all my life, is not working for me in this environment. So try and be input oriented rather than output oriented. Moving on. What does the spiral actually consist of? What is spiral all about, basically? The spiral starts from hesitation and control in a stage where you are not actually wanting to take any trades. Then somehow you get yourself in balance and you say, okay, if I don't take a trade, how will I profit? And you start taking a trade. It may lead to some profit. It may lead to some loss, but eventually it will lead to some profit because you are putting yourself to some stability. Obviously, probabilities are there. And then eventually you may have a streak of profits. Right? There will be a streak of profits. Or even a single profit or a cluster of profit. Whatever gets you till the next stage. Whatever gets you to the next stage. Exuberance. So this depends a lot on your degree of self-evaluation. For somebody, a few lakhs may be small. For somebody, 5,000 may be a very big number. Depends on your journey, on your sense, basically on your self-evaluation, degree of self-evaluation. What is the cluster of streak, cluster of profits or streak of profit, which will make you exuberant? Till the time you become exuberant, you don't overtrade. Once you start overtrading, that means you now think that I'm a genius. If I've done this, I can do it again, and I can do more because I have more capital now. And you start trading also more, and you start being extremely exuberant, start going to the smaller time frames, start doing things too fast, get addicted to the random profits, and then eventually either have a big loss or have a series of small losses and go to the next stage of frustration and regret that all the money I made here went away over here, and now I'm regretting. And 2 days you'll go to the bar and sit with your beer and say, okay, now I'm going to get it right. And the beer will call the illusion, or any alcohol cause all the illusion it can. Maybe it is nice relaxation sometimes, but it will cause the illusion it can. And then you will motivate yourself. And then it can be coffee for some people. Someone who is over here. And over coffee or beer, at the end, you will always want to get motivated back into the zone. And then you will start from day one. And the same spiral continues. All your abilities. And then, one fine day, you will look at all the mix of all the streak of profits. And you will say, this could have been such a big number. Agree or disagree? What do you want to do now? Obviously, first of all, shift and delete. Press the button shift and delete together to all your past regrets and start writing a fresh story. And this time, being well aware of what not to do. Why the spiral happens, why the trigger happens, why these things happen, there's a certain reason. Start working on yourself. Start understanding what your triggers and traumas are. Start understanding and asking yourself the bigger questions. Start, if you really think that you are in an extremely bad mental state, you can actually come to psychologists like me who especially define trading for you correctly and the trading psychology for you. You need to talk to people like your mother, your father, your friends about anything about the money part, about the trading part, or if you have fellow traders who someone who's mature enough to get things, uh, listen out to you at the same time, get things with you in a manner which is more objective. It does not need to be a very big trauma, and you do not need to talk to everyone or in a lot of details, but you need to at least talk to one person, and that is yourself. Expose everything that comes as a hindering emotion and whatever the triggers are. Recondition and reprogram your entire mental state. Now, how do you recondition your mental state? Those things obviously are very individual things, but one of the small pointers I can give you is to start thinking on a repeated level every day in a certain manner. To start doing something on a repeated level in every day in a certain manner. When you do that, you start sleeping over those conditions, and then it becomes a part of your life, right? Third is give time to see the results. In the entire change process of working on yourself, you start looking for results, and those results should not be looked for at least in the first few months or the first few weeks, because the moment you stop looking at the results will come. More than anything else in trading, I've seen this happens, that when you completely lose the inhibition to even prove to yourself to see any results, if there are other aspects of life, you attach yourself to the goal, output orientation 20%, and you give input 80%, it works. In some cases, you give output orientation 30%, give input 70%, it works. But trading is one thing which does not work until you give 100% input and 0% output. So stop looking for results. Disassociate a result. Otherwise, how will you crystallize the right habit? Take yourself easily. You are a learner. You don't need to compete with everyone or anyone, right? Exercise on your positive mental faculties and keep going to the next layer of which may be the hidden reason for you to do something which is not supposed to be done. And when you keep going to the hidden layers, these things will unfold to you automatically, one after the other. Why? Because after you have been prepared and matured enough to handle your outer layers of triggers and traumas, you will then understand the inner layer automatically. Now, each one of you will will do your thing individually on this, all that is on this slide particularly. But in my experience, what I feel is that everyone has a psychological and a physiological makeup. If we have these makeups which are so individual to each of ourselves, you cannot, maybe one or two of these things you don't need to focus on. Maybe one or two of these things you don't need to focus on. And there may be some things you need to focus on more. So really ask yourself the big questions and start moving forward. Give me a 1 minute break. 1 second, please. Yes, so the lot of questions which now the audio is there. A lot of question which is there, right? Which is because of certain individuality. We need to acknowledge the reason to ask ourselves big questions are very important. A lot of big questions which I ask to myself is the reason why you have all this in front of you right now. And maybe you have certain individual questions which will be deeper and for your individual self, which have been for me as well, right? There's more to things that I'm sharing here, but this is on a generalistic basis, on a generic basis for everyone. Now, why can motivation be bad for trading? Because how many of you actually get yourself motivated? Just go read something nice, watch something inspiring, and get yourself back into the zone to trade well the next day. How many of you do this? Okay, some people do this. Just raising your hand. 2 people, 3 people. Quite a few people do this out of the majority. So when you do it, okay, a lot of you towards the end of the session have started leaving. So quite a few people who are there, about 50% of the people actually inspire themselves on a regular basis. And believe me, I have been one of the persons who really believes in the power and the power and potency of daily motivation or every day or every regular motivation. But there are two kinds of motivation. One that makes you peaceful, one that makes you active. And the one which makes you active is the more predominant motivation we look forward to or we get out there. You really don't need that in trading. That is actually a spoiler in trading. Okay, because I'm not putting it in like a hard and fast that all the things that you read about are bad. Not all, but about 80 to 90% of it is not good for you because they are so action oriented. When you are on the screen, when you are trading and you have your capital, you already have that sense of activeness and risk taking. You don't need a certain thing to assert more sense of risk taking and force you to become beyond right then too fast. Also, motivation may do something very good to you, but it will be so temporary because the moment it is not there, the dose is not there, you're not performing. Also, it may get boring after a while, and then you want something else to motivate yourself with, right? Motivation can get boring if it's coming from the same source. Tomorrow you want something else, and then you look for something else, and then you look for something else. How many of you have actually had this spiral also? Right? So 2 days back you saw this interview, 5 days later you saw this interview. There could be no end to it. So it's good. As an individual it's good, but when you associate with your trading, it's not good. So please watch these things and read these things and everything, but don't not in the objective to perform well or to perform more actively, because this can be really temporary. Firstly, secondly, it can make you very state dependent. If you are so state dependent, you will automatically fall on the opposite side because you never have any control about when the most horrendous relative will call you, right? You never have any control over that. So anything external can get you in the wrong state also if you are state dependent, right? Now, hey, trading is input oriented. I've reiterated this quite a few times, and goal setting is output oriented. So motivation also talks about goal setting a lot, right? And one after the other, the layers of motivation actually go ahead when you have achieved something. And this is not the right kind of emotion you want to play out on the screen on a trading workstation. Lastly, good trading is effortless trading. I personally take it just like something which should flow out of you effortlessly, not pushing, not pulling, not trying to do anything, just having it done with your sync with the markets. If you feel like this, it is the best sort of trading. You will actually, and you know, you don't have to, you have to invite the effortlessness from inside. It doesn't come from outside. I can tell you something for which you will start feeling effortless tomorrow. You'll have to invite it from inside. A lot of has also got to do with your experience in putting the right logical pathways together, right? Any questions? Any questions? I've answered some questions. Yes. So the question is, okay, the question is when I book a small profit in the trend, it goes in my direction. But when I go not book the profit, it suddenly reverses and turns into loss. Oh my God. This is not, okay, this is a good question, but this is not supposed to be thought in this way. When you are booking profits and it still keeps going later up, you are associating something which has worked for you as if it has worked against you because you're looking back on a trade. However, to put it more clearly, the potential on a subjective level, the potential of a move which you thought was not played out by you. Maybe you thought that actually this is so a stronger trend that you should hold on to the trade. And thought and planned before or thought and planned in the moment, I don't know. But you did not act by it. So you, in the second instant, held on to that incorrect association and try to, you know, feel as if the output of the second trade would be the same as the output for the first trade. You have to realize that both the trades are mutually exclusive. That trade has got nothing to do with the previous trade. It has got nothing to do with you also. The market doesn't know you. You have been just one of the participants. Am I right? So don't make these associations, please. This is very common to make associations like these. So in that case, you really need the right cognitive pathways to build certain things correctly. There would be a trade if I'm trading for a pullback on if something is going and it's going back up. In a downtrend, it's a pullback. If I'm trading for that pullback, I'm defining it that I'll do it this way. But if I'm trading for a complete reversal of the trend, I'm following the trend, then it's a completely different trade. And both of them will have predefined planning. Okay, this is I'm going to get exit this trade at these levels, in this zone or at this price, whatever. So guys, I'm coming to the last slide now, and you must start, you know, you're made to believe that as if the mind is something very magical or there's something deeper which is there and actually very magical. But the point is that your mind, body, soul, everything is connected, interconnected. We tend to ignore these things sometimes. You don't need to eat so much. Uh, it causes your body to become acidic, especially during market hours. Don't eat too much. Eat only as much as you feel hungry and too little and light. And have a good sleep. I've seen a lot of market participants don't have a good sleep. They think they look at the Dow and all those kind of things. A lot of things which are not there in their control and trying to overthink all the time, trying to build up anxiety which is not letting them sleep. And I've gone through these phases myself. But get the emotional temperature checked and heal yourself by sleeping, because for the next day you will be more ready and fresh, and your really the brain becomes healthy. You'll be able to perform better. There is no point. We have been taught to work hard and struggle hard for money. There's no point doing all that. If you can, and you actually can, believe me, be very stress free and still make a lot of money and live a quality life. Okay, have little gluten free food and have a low carbohydrate diet. We actually eat more than we need, and that causes again our body to do things which is not right. Ashokji says that mostly he goes for intraday and he started trading as a full-time career. Oh, that's brilliant. So sounds like a lot like me. I also go for a lot of intraday trades, and the point is, if it is a full-time career, then it is more important for you to sleep well. So it's good that you have well-defined parameters that you will not take positional trades. Some days, or with your expertise and experience over time, if you want to take, that's a different thing. But it's a good thing that you are having good sleep and you've defined it very well. A lot of people don't define very well when they're doing full-time trading. They're not defining it very well. They are not defining it in a manner that will be healthy for them. That I want just intraday, I want positional and intraday. They're not defining it very well. So it's good that you're defining it very well. I'm very happy to see that. Gluten-free and low-carb diet is great. And drink lots of water, because especially when you are on the thinking process, or you are doing any kind of mental process, the brain is actually nothing but a series of sparks and impulses, right? Electric impulses. And water is a good conductor of electricity. Water has got certain electrolytes, and we have not been trained to actually drink water properly. We need to drink enough water, and maybe not gallons and gallons, but we must drink enough water from time to time. You must have noticed when you get stressed, you have a dry mouth. So body is asking for water. Ashokji asks, how much time should be spent on a trading day? You mean to say you spend time as much as the market hours are? During the market hours, you have a tab on the markets. You have the screen in front of you. Either you have a office or you have a home office, and you can trade very comfortably. And it is about your parameters and what you're looking forward to trade like. Or you can rephrase this question if I'm not answering it the right way you wanted. Oh, you need some homework time also. Yes, of course, you need some homework time. After the market hours, maybe market hours get after 4 o'clock, 5 o'clock, maybe at 7, 8 o'clock, you must do some homework for the next day. Okay, if you're over trading, how much time? See, that is the problem. When you're over trading, you're scared in sitting in front of the screen. So you start limiting your time. And when you start limiting your time, you're actually missing on the best opportunities are going away from your hand, right? So you don't associate the time you're giving to the screen with the time you should be trading. You start doing like this, that you start giving some time to optimize yourself. What do I mean by optimize yourself? Depending on your pace, your psychological stamina, and your way of thinking, keeping all that in one place, also keeping you watching the markets and monitoring the markets without the trading aspect, without even the thought of trading. Forget a trade also, without even thought of trading. You optimize these two states of mind, because you need both. Obviously, to some extent, you need to know if you are feeling a lot of stress and fatigue, and it is not the right mental state to trade. Don't trade. That is something you need to acknowledge. But if you start doing that as an everyday thing, you will never. There would be never be a fit time for you to sit and trade. Don't do over trading. Learn patience. Condition yourself. Repeat this process. Try and get better. Try and make patience your only goal every day. You don't need to not sit in front of the screen. What you need to do is to optimize your screen time, right? And I have done it, so I know what you're exactly going through. So it's completely fine. It becomes difficult for some people in the beginning, but it's okay. And all the entire this thing that old habits die hard, nothing like that. All old habits can change. All patterns can change if you have the faith, belief, courage, the willpower. Have a good work-life balance. That is extremely necessary, because the entire thing which is defining yourself should not be your profession and your professional success. There should be other things that define yourself as well. So have a good work and life balance, right? So I'll wrap it up. And in case any one of you is interested, you can call our course coordinator or me. Uh, I teach a course which is a 20 session long course, which includes from the very basic to the very advanced level of technical analysis. Also, a lot of technical strategy. It's a web session based course. We also keep the recordings available till 1 week, so in case you miss the class, and the classes are live, you can ask me questions just in the similar setting as this one. We have a inner circle where all the past students are there, so that group is what you become a part of for life, and very interesting discussion, and thankfully a lot of students are doing very well with the performance. So that's it from my side. If you want details, you can get back to us on these numbers, and I will have a session of my course itself after half an hour. So I'll get busy, and have a good Sunday. Thank you all for coming. It was a wonderful, wonderful time I spent with you. If you want to ask me anything personally, you can always get back to me, right? So thank you very much. Bye bye. Thank you. Thank you, Shashank. Thank you, everyone. Saurav, Shashank, Ashokji, Amitji, all of those who are here, thank you very much for coming. I will log in off now. Bye.